Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Let's get some conversations going now. Anand Rathi Wealth is the stock on our radar. Company reported a good set of Q2 earnings as revenue and profit rose, while company also recorded growth in new client additions. To discuss how the quarter has gone by and how is the business looking like right now in terms of momentum, we are now joined by Feroze Azeez, who's the Deputy CEO at Anand Rathi Wealth. Feroze, good afternoon. Thanks a lot for joining us. Pleasure speaking with you. Well, good set of numbers in Q2. What's the outlook now as far as the AUM is concerned? 15% growth on a YY basis in AUM last quarter. This was when markets were wobbly. Now we are sitting at record highs. Can you tell us what kind of AUM growth are you expecting, and also kind of client additions, because that is something as well that will aid to these numbers?
Sonal, you're absolutely right. In a wealth management business, these are lead indicators of how the business will do. If your assets grow at a reasonable pace, your revenues will, and in turn your profits will. And your assets grow because of two important things. One is the movement in the portfolios of the clients. If the clients' portfolios grow 12-14% every year, that's God's gift to us in terms of AUM growth. Then on top of it, if you are able to grow at 10-15%, and that's the long-term guidance we've given. So will we meet that number? Hopefully, yes. And like you rightly pointed out, the first 6 months were not the greatest of the 6 months for this financial year. In spite of that, clients gave us 2,500 crores new from external sources, be it from other competitors or fresh savings. So 2,500 crores is compared to the same period last year was 1,200 crores. So in bad times, when clients trust you more, it gives you a satisfaction that we are actually managing risk. And that's when you look prettier on a relative basis. So that's one. Client addition, like you said, from same period last year, we added about 570. This year, first half year, we added about 850 of them. So because clients are able to realize the merit of dealing with us during bad times, more so in good times. In good times, everything looks good. So it becomes very difficult to distinguish between the boys and men, if I have to call it that way.
So in the past, you've said that your AUM growth has 4 legs to it, right? One is the market value of existing growth. Secondly is your existing clients give you a lot more business. They consolidate their holding. Third is new clients, which has been very strong. 2,500 crore is the number you've shared. And fourth is, I think, when you add more relationship managers, and the number there is 850, right?
Rima, this is a great question. I'm glad that you read out these 4. We've been speaking of these 4 mutually exclusive engines of growth. To say the number of RMs today we have is 271. 850 was the number of clients we added in the first 6 months. 271 are the current relationship managers, if we have to call them that, wealth managers, private bankers. That's the strength. But as we speak, we are training about 270 of them, which is called the AM fraternity, which are sharp analytical minds hired from B schools, rank holders, CAs, and stuff, whom we train internally. Over a period, we promote 30, 40, 50 of them every year, depending on their credibility to actually take up that role and live up to the brand promise which we have given to our prospective clients. So yes, these are the 4 legs of growth. The market movement or the portfolio growth in the first 6 months didn't contribute because 30th September, the market was not at its peak. It was significantly lower than where we are today, from 18,700. I think it was somewhere around 17,000. So that has not contributed. The other 3 legs have contributed for the first 6 months. And going forward, we expect all the 4 legs to contribute. And they are not, they are negatively correlated sometimes. So it brings in certain degree of stability to AUM growth and in turn revenues.
So this business from new clients at 2,500 crore, is it a record high for you? And in the first 2 months, could you tell us what the number stands at?
So Rima, yes, it has been a record high. Client addition has been a record high. New money is coming from new clients and old clients, which is what is jumbled into that 2,500 crores, is also a record high. These 2 months have been good. I don't know whether I'm supposed to be sharing all the numbers because we've not finished the quarter. They've been very good, and we maintain our guidance for the year, and the guidance is conservative to our mind. We've not revised it upwards. But the long-term guidance, which is what our confidence comes from, the 20 to 25% growth in revenues and profit after tax for long periods, if not few years, but for a few decades is possible in this business, because God is extra kind to you, because he gives you a 10-12% just by the virtue of time. Since our last 10 years, our client performance has been 12-13%. That comes to you for free with time. And you have to just worry about the next 12-15% growth to grow above 25%.
Feroze, when we are talking about a lot of stuff which is happening well, one of the metrics to look at in terms of wealth business is also the fact that you have to look at profit per relationship manager. What is that for you? Because the last number that I checked, it's still lower than the industry. Can you give us what that ratio is right now? Your number of relationship managers, as you said, at 271. Will you plan on adding more to this number?
Yes, Sonal, you're absolutely right. One very important matrix, again, a great question, Sonal, is profit per relationship manager. To my mind, because it's a very diverse group, I have 20-25 relationship managers who have finished 10-11 years in the system. There are also new ones. So I basically, as a company, stratify them into time periods. So profit per relationship manager this year, if I look at 155, 160 crores of PAT divided by 271, it comes to 60-70 lakhs per relationship manager. But as the vintage grows, because our attrition levels are decimal, our regret attrition is in decimal 0.74, if I remember the number right, for the second quarter of this year, we don't lose RMs because and that's when a satisfied client can be there, because if a client RM attrition is a very big problem in the industry. We have been able to solve that with vintage. The RM profitability shoots up as a hockey stick, kind of an inflection point, especially after 4-5 years of an RM staying in the system. So to answer your question, Sonal, per RM today, if I divide the PAT this year guided by the number of RMs, it's 60-70 lakhs, somewhere thereabouts. But that's got a large dispersion with vintage.
Okay, just one final question then. What would your market share be in the private wealth management space, and how has that number changed in the last 1 year? And secondly, I remember Anand Rathi, who is the founder and chairman of your group, he had said 6 months ago that the company is open to acquisitions. The last big one was Religare, which you all did about 4.5 years ago. Have you made progress on the inorganic front? Have you identified any acquisitions?
So, Rima, what happens is acquisition, like you said, requires, one is the capital, which thankfully and the profits are adding up and the reserves become higher. The other is the cultural fit. We come from a mindset that culture is very critical. So acquisition from an inorganic standpoint becomes difficult, not just on numbers, but the team has to fit into the culture and our thought process, because we are very client-centric. We only give to our clients what we buy for ourselves. But in wealth management, there are 21 different kinds of product lines, and people like to sell all of them. So to answer your question, we've not progressed too much. From a capital adequacy to do an inorganic growth, we have done very well. We're trying to see if there are some which can have a cultural fit, and that's where a couple of deals fall through on the last leg of a fitment perspective.
Okay, Feroze, it was a pleasure speaking with you. Thank you so much for joining us, telling us what plans are in place and the outlook going forward as well. That's Anand Rathi Wealth Management, the stock up 0.5% as we speak. With that, we'll slip into a break now. On the other side, we'll tell you all about the impact of